Last week, a Reuters poll found Republicans are running 18 points ahead on immigration, 20 ahead on crime, 12 on foreign policy, 10 on the economy, with one very dark cloud: inflation. Polling says Trump is underwater by 20 points on the second biggest election issue after immigration. Now, to be fair, voters don't think Democrats have a plan either, but prices are Trump's Achilles heel, especially when he swore on the campaign trail, quote, "Starting day one, we will end inflation. Prices will come down fast with everything." In fact, inflation has slowed a lot since Biden, but prices are not coming down. Now, there's a couple reasons for this. The most obvious is Congress did not cut spending. They did slow it a lot, so federal spending is up 1.5% this year compared to 10% in Biden's last year. But what would it take to actually lower prices? In short, you have two options: either a mass extinction of crony regulations that collectively add roughly 20% to the cost of everything you buy, or failing that, a Wall Street gutting sell-off of trillions in assets the Fed bought with printed money. So main parts of CPI inflation are housing, 36%, energy and food, 20%, healthcare, 20%, and manufactured imports, which are about 10%. Now, house prices actually go up with rate cuts, which are finally happening, since lower mortgages bid prices up. So even with cutting red tape, it's very hard to move that number. On energy, prices are coming down a lot. They're actually down 20% since Trump took office, but they'd be down a lot more, again, without environmentalist red tape. Meanwhile, on tariffs, so far foreigners and middlemen are eating them, but a tax on imports obviously is not making them cheaper. That brings us to the big ones: food and healthcare. American food prices are up to 15% higher because of red tape and mandates, while healthcare could be double or more. In fact, healthcare prices is driving the current shutdown. So deregulation in food includes letting farmers plant what they want, letting them sell direct to customers, letting them hire their own inspectors, and getting rid of environmental straitjackets that wipe out family farms. On healthcare, the keys are price transparency and cost sharing, so hospitals have an incentive to cut prices, and customers have an incentive to seek out those lower prices, along with expanded scope of work so you don't need a doctor for the sniffles, reining in ambulance chaser trial lawyers, and, of course, repealing so-called con laws, where hospitals can literally veto new competitors. Now, Trump's trying his best, including a DOGE-driven repeal of tens of thousands of regulations that aren't even authorized. But regulations are bought with good donor money, so that will be trench warfare. That all brings us to the other rabbit in the hat, the Federal Reserve, specifically pawning off the $6 trillion stash they bought with printed money during COVID. Now, $6 trillion is good for roughly 30% of the money supply. So if you pawn it all off, you get 30% deflation. Unfortunately, Wall Street is so dependent on that flood of money that it could set off a financial panic. In fact, we already got mini panics in 2013 and 2019 when the Fed tried pawning off some of its 2008 stash. So what's next? Brought to you by I Trust Capital. Trump promised lower prices, but with Congress spending like teens on meth, the only way we get them is either massive cuts to red tape or gut Wall Street and damn the torpedoes. Read the rest with charts and all the gory details at propsandhouse.com. Okay, we'll be watching. See you next time.